In today's rapidly evolving business landscape, where every expense is crucial, the convergence of technology, finance, and overall business strategy is more important than ever. That's where FinOps, or financial operations, comes in. A groundbreaking approach that aims to bridge the gap between IT, finance, and business, aligning technology operations with financial accountability and fostering collaboration, transparency, and efficiency. At its core, FinOps is about optimizing the costs associated with cloud computing, but its principles extend beyond the realm of technology expenses, influencing overall financial management. My name is Siobhan Omani, and it's my pleasure to welcome you all here today to this Tech Central webinar in partnership with Obsidian Systems and AWS. I am joined today by George Lobo, EMEA Cloud Economics Scaling Lead at Amazon Web Services, and Grant Bingham, MD of Autumnleaf, to unpack the realm of FinOps, focusing on cloud economics and effective scaling using Amazon Web Services. George and Grant will answer critical questions about cloud expenditure and management, offering insights into how businesses can optimize their cloud investments for better financial and operational outcomes. We encourage active participation from our audience, so feel free to share your thoughts and submit your questions at any time in the comments box. We'll address them both organically during the conversation and in the dedicated Q&A session towards the end of our webinar. Let's kick things off by having each panel member briefly introduce themselves. Grant, over to you.
Good morning, everyone. So I'm Grant Bingham, MD of Autumnleaf. Autumnleaf is a part of Obsidian Systems. We bring the right code, compute, and data together smarter and cost effectively. We're an advanced AWS partner, and they've been helping customers optimize workloads in AWS since 2013. I'm a FinOps certified specialist and been working with customers to not only save money, but learn about FinOps principles and how to bring them in business.
Thank you, Grant. George, take it away.
Hi, everyone. Very nice to meet you. My name is George. As mentioned, I'm the scaling lead for FinOps for EMEA. So what I do is I support the top customers across EMEA in implementing their FinOps strategies. So the idea for today is to walk you through a framework on how FinOps can be implemented and what things you have to have in mind in order to implement a proper and solid, well-rounded FinOps strategy, right? So the goal is to walk you through FinOps. So where are we at? What is the main goals that we're trying to achieve and why FinOps exists as a whole? Then we move on to the actual FinOps framework that you can leverage in order to best implement a cloud financial management strategy, looking at costs holistically. So not only at cost optimization, not only at cost visibility, but at everything as a one. And then we will understand the next steps with the team here. Right. So first of all, let's start by understanding why FinOps, right? Why does this practice exist? Where is it coming from? And what do we want to achieve with it? So AWS, with a couple of researchers, looked into the data on how optimized our customers were and how properly aware they thought they were around managing their financial management, right? And what we understood is that 80% of our customers reported poor cloud financial management. And when we tried understanding how this resulted in terms of their, overall cloud adoption, we saw that 25% of our customers were saying that they were not innovating because of this, and the overall cloud adoption was being impacted at 53%. And then this was something that was self-reported, right? So when we tried understanding how this correlated to actual cloud spend, we saw that 30% of the total spend that we had from these customers was wasteful spend. Now, what does this mean? This means that they could have the same exact performance and the same exact use of the cloud with 30% less costs. And this is something that just had to make AWS look into, why is this so, right? How come that we are having such a huge waste and it's clearly impacting our customers, right? And we started having hypotheses from the difficulty of implementation to the lack of solutions. But actually, once we started doing surveys, and actually the biggest agnostic company in the market called the FinOps Foundation, when they started doing surveys as well, they understood that the second biggest challenge that customers are facing, and now becoming the first actually, is around managing their costs. So not about technical implementation, but about the managing part. And why is this so? Well, this is so because there is a gap in the market between finance and technology. Previously, how the old IT environment was finance would request a machine and would pay for it, procurement would find the cheapest one, and then technology would use it and depreciate it. This meaning that every function worked in a silo, right? You had finance just dealing with our costs, and you had technology just dealing with the tech, right? They wouldn't necessarily need to have financial concepts because they would be only on the realm of their data center. Now, with the cloud, that's not the case, right? When you're in the cloud, now finance stakeholders need to know about some key concepts of cloud because they are resulting in an FT cost. And then our technology stakeholders, more importantly, need to know about some financial concepts because, at the click of a button, they could spend thousands of dollars, thousands of euros, and not know what happened there, right? And the guardrails need to be in place, the optimization needs to be in place, but more importantly, there needs to have this in between. And that's where FinOps comes along, right? So who is this person, this function, this team that is not quite technical, that is not quite financial, but just basically gets the job done, right? One thing that I usually do with my customers, and we've come to realize, is that FinOps is simply who are you pointing to blame, right? Because at the end of the day, you need someone to blame, you need someone to point the finger at, and this void that creates unoptimized environments is based on the fact that usually it's no one's responsibility, right? So this person's goal is to focus way more on that change management aspect, on their operational aspect, than necessarily the technical implementation, so to say, right? So finding the right profile, it does vary, and this can be, and again, I'm saying a person, but again, it's a persona. It can be a person, it can be a team, it can be a set of champions. As long as it is named and as long as being acted on, there are better or worse ways according to your organization, but any of them is better than not having it, right? So that is the key here, and this void is something that is useful to understand. Why? Because as we mature in cloud and as we mature through time, there needs to be a different focus in rate and in usage, right? We have usage being, well, how much are we using of cloud? How much are we actually leveraging the services? And rate being how much we're paying for it. And in all fairness, what we see more is that we don't necessarily want your usage to go down if it is correlated directly to your business. But we definitely want your rate to go down. We want you to pay less the more you use. And so that's where FinOps comes in, right? So not only doing savings plans in our reserved instances, but actually looking in detail at the different ways you have to optimize and the different ways you have to reduce your costs through time. And that's basically what you see in this graph, which is focusing more on unit metrics than necessarily total cost. And how do you achieve this? You achieve this by a set of activities that go way beyond just commitment-based purchases. As you can see in this slide, a lift and shift is not the golden rule, right? It's not what will give you all of the advantages, all of the benefits, mainly because it is completely new, right? And what customers tend to do is do a lift and shift, recreating what they had on premise. And that is not what is going to let you have the biggest savings, right? So it's the continuous work you do through that to arrive to true optimization that will allow you to reach this stage, passing by accurate forecasts, passing by right enablement, passing by proper reporting, and then reaching true optimization, right? Not just, oh, we did an optimization activity, we did an optimization round, is we have a financial function, and they are completely different in the way you approach it, right? But now that I've mentioned and I've thrown around the word a bit, let's understand what this is, right? So what does it mean to look at FinOps and to look at cloud financial management holistically? What does that entail? We divide it into 4. See, save, plan, and run, to put it simply, or measurement and accountability, cost optimization, planning and forecasting, and cloud financial operations. If you are familiar with the FinOps Foundation by any chance, they are very similar to one another. They were made by almost the same people practically, so there is not much overlap there. And what we call measurement and accountability, or C, they call inform. What we call cost optimization, they call optimize, and what we call operations, they call operate. So as you can see, really don't get too stuck on choosing a framework as long as you have one. This is just a way to have your function fully covered and having an holistic view on it, right? Now with that disclaimer, let's look into each one of them in detail, but just as an overall explanation, C, we want to understand how we're looking into our costs. So do we know what those are? Do we know exactly what costs we're reporting on? Optimization is the most popular one, commonly confused with FinOps as a whole, actually. And in cost optimization, we look into how are we at optimizing that rate and that usage. Thirdly, planning and forecasting. This is divided into two main groups. How are we at setting the guardrails and the boundaries of our current costs, thus budgets? How are we at predicting our costs in the future, thus forecasts? And lastly, operations. Simply put, how can we make sure that everything that we want to happen actually happens? How do we make sure that all of this, the other activities that we want to do, actually go through? And here, something very interesting to point out is in the most recent FinOps survey that asked FinOps practitioner what was the biggest challenge they were facing within FinOps, the number one reason that the number one, well, challenge that customers were facing was getting engineers to take action. So getting people to act. And this is very much on the operational piece, right? This is very much related to that change management, that getting people to act, getting people to have a say and to, well, actually implement the strategy that you are designing. Right. Let's dive deeper into each one of them. First of all, measurement and accountability. When we think about this one, we have to think about two main areas. First of all, how are we at identifying our costs? And second of all, how are we at reporting? So let's look at identification. One of the pitfalls that we see our customers facing is not having a clear method of identifying their costs. They have heard that tags make sense, and so they're just tagging along, not even understanding what is their coverage, not having a clear visibility on how much they're actually efficient in covering their tags, because most of the times, tagging is a commitment. Tagging is something that involves a lot from the entire organization and that needs to be implemented as a full-on strategy in order to be done successfully. And if you're choosing this as your cost allocation model just because, then you're really most likely wasting and losing visibility on your costs, right? So first of all, understanding how you want that cost visibility to be, how you want that cost identification to be. And that passes by choosing an allocation method. Choosing an allocation method is, okay, so according to what my organization is, how am I going to group my costs so that the entire organization knows that we're grouping them in the same way? If I use accounts, that is fine, right? Accounts has a huge advantage. If you choose accounts, then you can basically have 100% coverage because everything sits under an account, right? But then the downfall of this is if you start having shared resources, if you start having multiple accounts resourcing from the same sort of services, it will get complicated, right? So you have to have a very robust account strategy and a very simplified one for that to make sense. And then you want more detail. So you want to go into cost categories and you want more detail and you go into tags, right? But if you go into tags, make sure you have a proper business case to go into tags. That's the main thing here to have in mind. Now, once you do go to tags, it is very different having tags and having a tagging strategy. They are completely separated. Having a tagging strategy is way more than just implementing tags. It's having a tagging dictionary that the entire organization understands, that the entire organization makes sense of, that it is being communicated, that a new person knows where to find it, that you are reiterating, and that you know exactly what is reactive and what is proactive. So these are the ones that people will have to use yes or yes, and these are the ones that actually will leave them as optional. So all of this is part of having a tagging strategy and not just having tags. And then the second part of this pillar is how are we at reporting our costs? And reporting here is what tools are we using, be it Excel, Cost Explorer, Billing Dashboard, external parties, what have you, to visualize your costs. And is everyone that we want to look at this cost looking at this cost, right? Because I see countless times customers that implement 1,000 dashboards and no one is using them. And actually, what you really need is that people adopt those services and that people just have one for as simple as it is, right? So you have Cost Explorer that is more on the simple side. You have the Cloud Intelligence dashboards that is more on the advanced side. You have external partners that really go deep into the services as well. So there's a myriad of options that you can choose in order to visualize your costs. It is interesting though to have a chosen one because, and here's an interesting fact for you, on average, each customer has 4.5 tools to visualize their costs. If you have 4.5 tools to visualize your costs, that is quite a lot of tools, and that's really no unification process that you're implementing there, right? Now, let's give you some numbers because I think for every one of those topics, I think it's interesting to bring some numbers in. So, what is the impact of having this cost visibility? So, when you look at in the screen, you see that actually, when cloud performance is monitored consistently and systematically, so just that we are looking into our cloud spend consistently and systematically, we see that there's 27% more savings and 87% more SLAs met, right? Just by having this monitoring filter and having this control in place, you can see the impact that it has. And then an interesting factor as well is when 70% of the cost or more is allocated to a business unit or team, so you can identify and allocate back at least 70%, there's 52% more savings. Now, this can become easy to understand because you cannot optimize what you can't see, right? But if you understand it this way, as in it does need to be allocated in order to be optimized, it does help to paint a bigger picture on the importance of this as a whole, right? So this is our first pillar. By the way, as Shabon mentioned, if you have any questions, throw them at us. We're happy to respond.
George, thank you. On that note, we've actually got a question I'd like to pick up on before you move to the second pillar. And that is, how important is cost allocation in the FinOps framework, and what strategies can organizations use to allocate costs effectively? I think you've briefly touched on this already, but perhaps if you can just share a little bit more.
Of course. So cost allocation is key. As you can see actually by this data point around the impact of having an allocated, having your costs allocated, cost allocation is key, and having a chosen one, it's fundamental. We see that this tends to be one of the topics that customers think they're working on. And when I do FinOps assessments with our customers, we see that they never report this as a problem because they say, oh, we have tags. And that makes it a very dangerous topic, right? Because if a customer is growing confidence in a topic that they're actually not doing well, that's the worst kind of topic because they're not aware that they are as bad as they should be, as they shouldn't be actually. And so cost allocation, you really need to understand how you want to group those costs and what actually are the best methods for you, right? Tagging is not a golden rule for everyone. There's ways, for example, like cost categories, where you can just group different costs, resources, tags, and give it a name. So sort of a mini categorization. Or you have accounts, you have tags, you have different ways to allocate, and it's key to actually define one. And then without it, it's going to be very difficult to communicate through the organization, and it'll be increasingly different to optimize. Does that make sense?
It does. Thank you, George.
Awesome. So is there any other question or are we good?
I think we can continue for now.
Perfect. So now moving on to the second pillar. Right. Second pillar is cost optimization. Here, as I've mentioned, we're going to look into two different areas. First of all, how to optimize rate and how to optimize usage. That's how simply as it is. When we look into this, there's many different activities that we have to have in mind in order to reduce our costs. But most importantly, we have to look into unit metrics. We have to look and grow into an organization where we're looking into how efficiently we're managing our costs and not just the absurd amount of optimizations that we can achieve, which hopefully we can achieve. But I would like to put this slide, which I do prefer, around the 6 activities that you need to have in mind when you are optimizing. So first of all, right-sizing your instances. This is something that comes to a benefit of being in the cloud compared to being on-premise. And here the advantage is, okay, so if I don't need an instance this powerful, if I don't need an instance this expensive, let's just cut it back. Right sizing, and here you have many tools that tell you the right sizing potential in your organization, but basically is based on what I currently spend, based on the services I currently use. Let's look at my usage and let's look into what I do with those services, and let's see if I actually need it, right? Let's see if I actually need that to be as powerful as I am paying to be. And this is quite a normal behavior after you migrate to the cloud. Because after you migrate to the cloud, you tend to do a one by one of what you had. And data centers typically are an over provisioning scenario because there isn't such a thing as auto scaling, right? But here there is. So making sure you're using the service that fits, it is fit for purpose, is what makes sense, and it can lead to a huge amount of optimization. Secondly, still on the more technical side, elasticity. Right here, we see that although I might be saying this, and you might think, oh well, that does sound obvious. It is not something we see implemented too often. And this is, if you don't use it on the weekend, why are you paying for it? If you don't use it after hours, why are you paying for it? If you are using a test or dev environment, why is it working before hours and after hours and on the weekends and on vacations, right? So in an ideal scenario, a graph of your spend, I could be able to look at it and tell you what is a weekend without the label of the days, right? Because usually the spend should go down. And if it doesn't go down in your production accounts because of how you're structured, and that is perfectly valid because businesses run, that doesn't need to be the case for your test and dev environments, right? So looking critically at your organization and what should and could be optimized makes a lot of sense. Then the most popular of them all, the pricing model. Do we have space for reserved instances, savings plans? So those commitment-based purchases that are, if I'm going to use it, then I will. Why not just pay less for that? And then the usage of Spot, right? Spot for me is one of those services that it doesn't get the credit it deserves for a service that can lead to 90% of savings. 90. It's really a number that is just very big, and basically it's using the unutilized capacity of your instances and leveraging that for your infrastructure, right? That's what Spot is. But there is a fear, oh, but they can cancel them. Oh, but I might be left without it. Well, yes and no, right? So just for you to be aware, you get warned and you can automatically cover it by other instances or other spots. So it's not like you cannot create an infrastructure where you're left with your instances stopped. And just so you know, 95% of the times a spot instance was stopped by the customer, not by AWS. So it was a customer seeing that actually it had no more need for it. Then storage classes. There's different storage classes based on how many times you want to access that data and how fast you want it. And so making sure that you not have everything on demand and you don't have everything just paying for the max that you could, it is very meaningful. And then the last one here is modernization. So for modernization, we mean, unlike in a B2C world, in B2B, a new service most likely tends to mean better price. And for example, when we speak around the instance processors, upgrading from one to another can lead to a 30% optimization, right? And it doesn't necessarily is that complicated to implement. So being critical around this and thinking, okay, so what do I have to modernize? What can I modernize? And then what glues all of this together is having a mechanism for cost optimization. Why is this very relevant? Because the only way you're not going to need AWS support and partner support all of the time is if you create a solid mechanism to optimize. If you know exactly who needs to look into all of these topics, what is centralized, so what is the responsibility of this FinOps persona, what is decentralized, so what is the responsibility of the different teams, what is, once you go to those teams, what do they actually need to do? How can they actually perform their actions? Do they have the right tools? Do they have the right resources? So those are all things that need to be have in mind more than just we bought some savings plans, right? So that is for our second pillar. Now, something just interesting before we move on is the different adoption rates of the services of the different activities that we saw. Right sizing tends to be the popular one, just for the fact that, well, you have many recommendations for right sizing, and it's the obvious next step once you migrate to the cloud and you do just a normal lift and shift. Modernization, on the other hand, very low adoption. So very interesting to understand it within your organization. Where are the modernization opportunities and where can you modernize, right? Um, so this is it for our second pillar. And now we're moving on to the third pillar.
George, before you jump
Yes.
into that third pillar, we've got another question, and Grant, at the same time, I'd like to invite you also, please, if you want to jump in and add to whatever George has to say, please do so. But George, the question is, and you've touched a little bit on this cost optimization piece, but how can organizations strike the right balance between cost optimization and ensuring performance and reliability in the cloud?
Right. So they need to, it's not an or situation, right? It's just a matter of task splitting. It doesn't, for you to be optimized in the right way, it doesn't need to affect performance in any way, right? Because otherwise you're not doing optimization, you're just cutting costs. That's not being optimized, right? So having someone that understands both the technical side and the financial side and is aware of that is the key to achieving what you want to achieve in order not to, well, harm the performance as well, right? So what you want to have is an organization that, for example, once you are creating a service, once you are creating a new account, you are making it using exactly the instances you need, but for example, setting auto scaling so that you don't get shorthanded if needed, right? So creating a cost aware infrastructure doesn't need to affect performance, right? All you need to make sure is that if you have a robust optimization strategy and you know that the people that are implementing it have the right tools to do so, then it's just being cost aware at the time of designing infrastructure and not necessarily just cutting costs.
Fantastic. Thank you, George. Grant, anything you want to add to that?
Yes, just a couple of things from experience. So the first thing is, when people set budgets, setting budgets in the cloud is a very different beast. And in my experience, companies are still setting call it a singular budget. And what I like to think of is that you should be setting baselines for a budget. What is your minimum? What is your maximum? What is normal? And also consider in your spend, a big factor is ultimately you're now in a dynamic environment, in an elastic environment where you can think about service level agreements. Historically, in my experience, when someone says this thing needs to be up all the time, it's a black and white situation, right? So shutting down something has a meaningful impact. For all of you, I'm sure you're all aware, backups, disaster recovery, failover all come with a cost. And now we can actually go and quantify that and say, if you want this up for another 3 hours, it's going to cost you X amount more. So we can quantify that. And ultimately, business needs to make hard decisions to say, if you want this extra uptime, it's going to cost you X. So just mirroring what he's saying, you now have those numbers available to you and you can do something with it. In the past, you didn't have those options, right? It's just up. And if you shut it down, it's not like you're saving money. You're just shutting things down.
Ron, thank you. I mean, I think you've touched on something quite important there, also just around the visibility and accountability piece. And George, you briefly touched on tagging a little earlier in the discussion. And we've got a question here from the audience that says, what role does tagging and metadata play in improving cost visibility and accountability? Yeah, not sure if George, you want to take that first, and Grant, maybe again, if you want to chip in.
Sure. So, well, tagging is the most powerful way to identify your costs because it's the one that allows you for more granularity, right? So it is basically a way to label all your metadata, and it's a way to create a metadata system for your services. So if you want to understand every single line of spend that you've incurred in the cloud, tagging will be the most effective way to do so. The catch of tagging is it needs to have the full organization tagging properly in order to do so, right? So it, tagging is a commitment, right? You cannot do it as a one-off. You cannot create it as it stands, because if you do mandatory tags, engineers will complain because they have to do mandatory tags. But if you don't do them, then your coverage won't be efficient. In the realm of the possible, if you can achieve this, you will have the most amount of granularity into your costs, and you will understand very clearly what is going on with your infrastructure. The difficult part is reaching there. That needs a robust operation side as well to do so.
Yeah, and if I can add to that, there are different aspects here. The one is I'm going to go and tag my assets so I know where they are, I know what they are, and I have a view of my landscape. But something you touched on that I think is quite important, we need to be careful about is I personally don't like tagging as a means for cost allocation because there are often gaps. If any of you have experienced it, uncategorized. There are areas and elements that are hard to tag. And so to go and have 100% cost allocation based on tagging is potentially risky. So I like to have, for example, account structures, put workloads into different accounts so that you have these basic structures in place where you can allocate these costs. So I think it's tagging is a very useful structure to go and track and find assets. But something like S3, to go and tag every asset is potentially something you may not want to do. So I don't think tagging is a silver bullet. It's very useful, but I don't think it's a silver bullet.
Great, thank you both. George, I think we can safely move on to pillar 3.
Perfect, thank you. So on pillar 3, and here building on something that Grant was saying, it's all around the control of our costs and the prediction of them, right? So how are we at setting our budgets, and how are we at setting our forecasts? So as mentioned, it is a dynamic world. It is a dynamic cost. It is no longer easy to predict costs as it was, because now it is very much dynamic to the way you're spending, the way you're growing, because it correlates directly to your usage and your growth of your business, right? So now we will divide this into 2 parts. So first of all, understanding actually how, let me go into this one because I do think this one explains it much better. First of all, explaining how we are setting our forecasts, and then how we're following up with those budgets. First of all, for forecasts. So when you are predicting your costs, there's 2 parts of it. Predicting the future costs of your current estate, and predicting the cost of new workloads. So those are the 2 sets of predictions that you need to have in mind. And for them, you will have, well, first of all, historic data that you can extrapolate for both cases, because you can say, okay, something has behaved this way. I can just pick it and make some sense of the new workload because it's similar to this one, or of this current one, I will grow X, Y, or Z. So I expect this to grow based on our historical spend, right? So the most common one is an Excel compound monthly growth rate, where it is a very fancy way to just say the drag and drop option. And then you have more advanced ways, right? So there's machine learning ways to predict your costs. But what is interesting to understand is there should be a mix of your historic data and your external data as well, right? To have demand drivers and external data as places to feed in to your forecast. So for example, if you are in the weather industry, you can input the weather into your forecast. You should input non-cloud data points into your forecasts, and that's where you'll understand. And this is you can do by starting to study your correlations, right? So this is something that I incentivize you to do, is understand the correlation between your cloud spend and your demand drivers, because they will be correlated to some of them. And then predicting the cost of what you've done for a living for all your life, it's easier than predicting cloud costs. So if you can create a correlation between both, is a very interesting way to start looking at forecasts, and what we see there are more advanced customers that are starting to do. Now, for the other part, understanding how to normally forecast any new workloads, having a pricing calculator that works for you, using the AWS one, using your own benchmarks, using your own data points. There are ways that you can do so, but what is interesting is that you understand and register what your engineers are complaining about, because they will complain, right? They will say it is very difficult to predict, that they don't know how to do it, that they, you know. So first of all, look at it as a range that it is. And second of all, do try to make sense of it in the sense of, well, what are they saying so that next time we can have it into account, right? Because the pricing calculators might not put some services as you want them to, might not show you the services as you want them to. So it's interesting to have this in mind. And then you pass on to setting those budgets. So budgets is how are we setting those guardrails and controls so that our cost doesn't go out of our control, right? So what services are we leveraging? For example, AWS budgets, that is a free service to keep your costs under control. What are we leveraging to keep our costs in a place that we know where they are? And then are we checking those variances, right? So having a proper standard operating procedure is key here. So if something goes over budget, it's not the end of the world, but we need to have it very clear. Okay, so it went over budget. Who gets notified for this? Right? Who's going to analyze this variance? Who's going to implement it? And who's going to decide if we need to change the budget or not, so that then we can get back to this process, right? Who is setting this budgets? Who's doing these controls? Who's being notified? Naming the different people, because the process is a simple notification service. You can put it in place, you can check those controls, you can adapt it accordingly, but you do need this mechanism in place and these corrective actions in place in order to drive this, right? So that's what's interesting, that's what's key in this slide. Does that make sense? Is it clear? Wonderful. So now, going into the last pillar, cloud financial operations. As mentioned, this one tends to be the unspoken hero of FinOps. When things start to click, when things start to make sense, it does tend to be related to this pillar. Because for as technically advanced as you are, for as good of a tagging strategy you have, if you don't have a proper operation side, then this will never become a sustainable practice. And there's different ways that can be so, right? You don't need a 20 people team to do so, but you do need the mechanisms, the processes, and the tools in place to have this being driven. So first of all, understanding who is backing you up, right? So a lot of FinOps is getting people to act. So getting the right sponsorship in place in order to drive these activities is quite understanding. And then having all stakeholders aligned. Remember, these are stakeholders that speak different languages. We have stakeholders that are not even in sync in how they perceive cloud, right? So understanding how they are aligned, how we're making them talk, how we're making them interact and cooperate, it's key, right? And we'll look into some numbers on how key that is. Then, what guardrails are we speaking of? What do we have in place in order to control our costs and not scare people away, pretty much, right? And then, how are we evolving? How are we bringing this to the next level? Is it going to be through enablement? Is it going to be through a new tool? Is it going to be through a new process? So how are we treating this as an iterative process that it is, right? And hopefully with this, once we have this in place, we'll be able to take this slightly more seriously and have it as more of a priority in the organization, right? In terms of ownership.
George, thank you. But
Yeah.
before you carry on, and sorry to interrupt you there, I think
Go.
given what you touched on your previous slide, it's perhaps a good point to jump in with a question we received right at the start, actually, of the discussion. And Grant, I'm going to lob this one at you, maybe to kick us off. But the question is, challenges really are inherent in any transformative journey, and I think. George, in your discussion of this slide, you've touched on and picked up a few of those. But what this attendee is looking to understand is what challenges might organizations face in implementing FinOps, particularly in encouraging a cultural shift towards FinOps, and how can those challenges be addressed to ensure a smooth transition?
Yeah, thank you. That's a key question to all of this, and I think maybe just underneath all of this, you must just understand that FinOps is a discipline. And what is it basically saying? It's saying our traditional processes, procedures, structures are just not geared towards this. And there's a lot we can talk about, but I want to cut to the chase to a few things. Number one is it teaches you that everyone is accountable, right? We've talked about this time and time again, but let's just talk about this for a moment and talk about from a pragmatic perspective. The word accountability is something we can easily talk about, but I think George mentioned it earlier. One of the hardest things that I certainly find, and I think most organizations find, is you see a cost wastage and you go and speak to the engineer because the development stuff is not being shut down and it's ignored, right? So the issue of everyone is accountable is the key question for me is how do you, in terms of that culture shift, get that person to have the right attitude? FinOps as a discipline teaches, helps with this because it provides a common language for finance, operations, business, and engineering teams to communicate. It's a multidisciplinary team. And ultimately, a finance person is going to speak to an engineer to say, shut that damn thing down. And it's up to the business now to say, how do you ensure that that engineer knows that's important? The next thing that FinOps does to help with this is to talk about observability and measurability. And again, as a common language that, and this is something that is key for me. I hate the word cost optimization because I kind of feel we're sugarcoating it. Wastage is the word, right? So when that engineer has not shut that thing down, you don't go and speak to them like you're speaking to an elementary school kid and say, you're developing and you think you need to be better. You're wasting money. And I would even put severity next to an issue like this, like something is down. Yeah, you're wasting money. And it's a severity level 2. It's an issue. It's an incident. So showing wastage in something like a cost explorer or something as an item is key, and FinOps promotes that. And then the last thing that I think FinOps helps, and there's so much in the discipline that talks around this, is the mobilization, and it's been brought up time and time again here. The concept of continual cost compliance, the discipline of looking at your costs and optimizing them on a day-to-day basis. The process that was outlined by George, emphasizes that. I'm sure he would mention to you that it's just an evolving cycle. It's not a linear waterfall model. We're continuously applying that compliance. But I think if I had to say it, it's disruptive. I would suggest, in terms of understanding the cultural shift, I would encourage people to go and create awareness in FinOps, not just in the finance team, but across the engineering team, business, and others, and bring them together as a unit to form a team that's going to energize FinOps within the organization. That's, in a nutshell, just a few thoughts.
Well, thank you. Thank you so much. George, I'm not sure if there's anything you want to add, or perhaps through the next couple of slides you've got, if you'll pick up on some of these points also.
No, I think this was a pretty a nice and exhaustive explanation of the question. So I think I would just be repeating myself.
Fantastic, thank you.
Great. So thank you, Grant. Now, what we were mentioning, and especially picking up on how to make this a ever iterating process, right? So what Grant was saying now around making this and turning this into a process and not an activity. First of all, identifying an owner is key, right? Who is this person that is going to take care of the cloud financial management journey? Again, here you can choose to do it in the form of a person. You can choose to do it in the form of a team. You can choose to do it in the form of a decentralized set of activities throughout the organization. Tends to be better to have a named owner in the function. It tends to be better to have someone clearly stated as the FinOps manager. Then understanding what are those goals and KPIs, right? What are we measuring at? Because if we're not measuring success, we're not understanding how we're getting better, right? Without KPIs, without metrics in place, you're really never moving along, and you're justifying in the organization the impact that you can have. So if you want to make sure you own to the same thing you're preaching, you need to make sure you are measuring yourself as well, right? So what are the KPIs we're tracking? What are the metrics we're holding ourselves accountable for? And how are we checking that growth? Those are things that are very key. Why? In order to define a ever cyclical process where we have ownership, we have rules, we have defined robust expectations, we have measured key successes and how that relates to the actual business, and we're driving efficiency. And that we have this always working as a process. We change our rules accordingly, we improve our efficiency. We define the rules, we shift the rules. We measure away, we shift the way we measure. So that as we go along, we refine this process with time. And just to put it into numbers as well, as I've been doing it before, when cloud costs are managed centrally, look at the amount of optimization that you can achieve. It's 38% more likely that you achieve these savings than compared to customers that do not have this cost managed centrally. And then for me is the most interesting line out of all of this is when there is a formal and strategic partnership between finance and technology, we see 22% more savings and 46% more accurate forecasts. And why is this so? Because if finance doesn't see cloud as just, oh, this is another IT cost, this is just another IT cost, then we are actually speaking a language that they will understand. We're actually digesting this in a way that makes sense to them, right? So here, what is key is when actually these two organizations are working together, we get way more than what we could get because we're getting them to speak the same language. You're getting them to cooperate. You're getting finance stakeholders to leverage the insanely valuable knowledge that the technical teams have. And you're getting the technical teams getting that robust and strategic approach to managing cost that the finance team has, right? So not to be overlooked. And so to wrap it up, see, save, plan, and run. Think about this when you're looking into your costs, when you're looking into FinOps. So thinking critically on, okay, so what am I, what are my costs? How am I looking at them? How am I saving or controlling that wastage? How are we at setting our budgets and predicting our future costs? And what are the processes, automation, and tools we have in place in order to drive this, right? So as far as the framework, that is it. So thank you very much. And now Siobhan, I'll leave it up to you for all the questions.
Fantastic. Thanks, George. Yeah, I think we've got one really nice question that's come through. And George, perhaps I'll ask you to lead with a response, and Grant, please then also chip in. But it's really around future trends. And the question is, considering the rapid evolution of technology, what trends do you foresee in the FinOps space? And how can organizations prepare for those future developments?
So where I see the most advanced customers going now is they were so far focused in the cloud, and now I see a bigger focus on going off the cloud with their cost comparisons. So understanding something called business unit metrics. So creating a correlation between cloud costs and demand drivers is where I see that the trend is going towards. And then just there's obviously always new tools, but creating this, bridging this link with the business side more through KPIs is where I see the next step in FinOps.
Thanks, George. Grant, any thoughts?
Sorry, no, that's pretty comprehensive for me. Nothing to add from my side.
Fantastic, thank you. And then, yeah, before we wrap up, we've also received another question that actually came through to us on LinkedIn. Darby, I'm gonna lob this one at you, but also George, Grant, please jump in. And the question says, as SaaS costs fluctuate and cloud management gets trickier, how do you handle expenses currently? Companies like yours are looking at SaaS spending per employee as an important metric and accounting for that cost in addition to operational efficiency. Is this on your agenda?
I'm going to hand it over to Grant for now. That's more his expertise. So, and then I will fill in on help certain, assist from a commercial side of things.
Perfect.
So can I fill that to Grant?
Sounds good. Thanks, Darby. Grant, over to you.
Yeah, just can you just repeat the question? It's quite a lengthy one. As what I'm hearing is we're trying to say, what I'm hearing is software as a service costs are perhaps something that you can more easily quantify and budget for. Yeah, whereas public cloud costs are more volatile and difficult to track, if I'm hearing correctly.
So Grant, I've dropped the question for you into the chat also, given that it is lengthy. But while you make your way over there, I'll just repeat it again, also for the benefit of the rest of the audience. So it says, as SaaS costs fluctuate and cloud management gets trickier, how do you handle expenses currently? Companies like yours are looking at SaaS spending per employee as an important metric and accounting for that cost in addition to operational efficiency. Is this on your agenda?
So I think all I could say on that on my side is that we are faced with enormous cost management challenges because of the diversity of what is out there. And as businesses, they're struggling to deal with what their cost allocation should be it capitalization, be it technology decisions. I think what businesses are having to deal with right now is some realities around IT spend as a whole. In my experience, IT spend has not been properly allocated in business, and it's requiring business to relook at their KPIs in general. But I do think that we have faced the most disruption in the past. If I look at AWS as a whole, for example, the ability to look at cost accountability, cost management is improving. So I think things are going to get better, not worse, as we go along. AWS we had reInvent just last week, and the number of announcements and changes that were made to improvements in cost management, cost discipline are tremendous. So I do think it is going to improve, but when it comes to software as a service, infrastructure service, platform as a service, and the decisions around those, and especially the TCO decisions and ROIs, there are going to be baselines that will allow us to compare them, and it's going to come with interesting results. Yeah.
Grant, thank you. Darby, anything you'd like to chip in with?
To be honest, from my side, I think Grant has covered everything. Just from our side, from a commercial side of things, we would like to, we back Grant and the team, with the services they offer with regards to software as a service. And then from a commercial side, we have used the tools that's given to us to help with those costs, to provide the customer with the best possible spend, and then that they don't overspend on those SaaS offerings.
Thank you. George, Grant, Darby, thank you so much. Unfortunately, we have reached the end of our time together today, but I'm glad to say we have also managed to address all of the audience questions we received. So thank you so much to each of you for sharing your wealth of experience with us. I mean, I think it's clear the intersection of technology and finance has never been more critical. And today's discussion has illuminated the path to effective collaboration and optimization. But in wrapping up, Grant, I'd like to invite you just to talk about actionable next steps. What recommendations do you have for organizations looking to implement or enhance their FinOps practices, and how can Obsidian Systems assist?
Yeah, thank you. Thanks for that. Absolutely. So I think what we've heard is one of the most important things is awareness of what FinOps is. I would strongly encourage people, firstly, to go and find out about getting FinOps certified, looking at FinOps.org. AWS has a plethora of information themselves. From Autumn Leaf and Obsidian's perspective, we've been doing this for many years. So the way we engage with customers is you can reach out to any one of our team, to ourselves, go on the website, and we engage with retainers where we will support, guide, augment, and build up your skills in your team and help structure and align you to meet these requirements, whether you're big or small. And we would look to put, and I want to mention just one thing, because it's not really talked about just in the session. If there's something that I would want to encourage each and every team to do if they're in a situation where they're running a workload, put your controls in place, put a daily alert to say, this is how much I spend. It's such a small thing, but it makes such a big difference, right? To go and say, I expect to spend $100 a day, so put an alert if you spend more than $100 a day. To do those kind of things, we actually have software that provides observability, these controls, tagging, and compliance So speak to our team and ask us about our products and tools that run on AWS and help you to do FinOps.
Grant, thank you so much. And I think that last note of yours is really sound advice. Speaking from personal experience, where having been burnt but not having those notifications on, absolutely second that. So yeah, thank you. And thank you again to our audience members who were able to join us live today. Your engagement through the questions that you've sent us has really been appreciated. For those of you who may have missed parts of the session or would like to revisit the content, a recording of this webinar will be made available on Tech Central in about a week's time, so keep an eye out. And we look forward to connecting with you again soon. Thanks, everyone.